Hello, it's 7:39 p.m. Tuesday's night, evening, actually. Today, I'm just gonna talk about Tuesday's market and my new risk management plan as I keep fucking up my trading. Most of the time, I'm right on my setups, but it's just the rules. I never follow the rules actually. I I end up doing revenge trading, over trading, expectations get too high, I don't book my targets on time, I don't take partials, and I keep booking up losses, but for targets, I don't book them. I wait for them to shoot the moon or something, but obviously they never will. Market makers not gonna send the market one way without retracements, and at each retracement my stop loss will get hit. Obviously retracements are long, so because my stop losses are also tight, I don't want to blow my count. It's only like how many percent actually, 4% risk. Overall 4% risk and my count is out. Let's start with Tuesday's morning pre-open in London. Nothing much actually. We could find a setup, but I didn't care about it. Leave that. Not high probability, of course. Here we see consolidations. A lot of equal highs, a lot of equal lows. Equal lows gets taken. Market touches the end dog. New day opening gap. Market climbs up, eventually taking the equal highs. London highs actually. Equal London highs. That's our sweet turtle soup there. And what's the time? 8 a.m. Start of the new 30-minute cycle. It comes down, market structure shift here, climbs up to the fair value gap. Also we have an inverse, 50% get respected. If we enter here, target this fair value gap high. I will talk about risk management later, but let's just get the idea how many points we could capture there. 25, 33, bottom of it 40, and how about the low? Low exceeds our low. It's almost 80 plus handles. But of course, we would take partial there and move our stop loss to, once we have taken a partial there, we will move our stop loss to this big inverse fair value gap stop here to make it break even and cover a little more costs. Yeah, then we make a retracement to the inverse fair value gap here, not inverse, CV here, comes down to end dog, consolidates, takes out the sell side again. Then we open up here, open up, takes does a little manipulation before running up, fills up the whole of this gap. This fair retracement is basically the gap, and ignore the music, it's just for better focus. Comes up, eventually taking buy side, making a high there, coming down to this busy, coming up, shooting down, making this inverse. That's our first presented fair value gap. It did not serve much purpose today, but let's see. It climbs up to the inverse fair value gap, drops down, climbs up to our first presented fair value gap, fails to take over it, drops down, making this down close candle a breaker. If we take this full, this down close candle is a breaker now. That red shaded area goes down, and how deep it goes down, because I failed many trades here. I was predicting it to go more down, like trading here, trading again here, that it should go down, but it didn't go down, and I eventually ended up 2 break-evens and 2 losses. Not good. So I had to revisit my risk management, created a good plan. I'm gonna follow it with my life. This time I have to follow it with my life. This fair value gap fills it up, shoots out of it, but if our stop loss is below that candle's low, we are safe. And what time it is? It's our 10:50 to 11:10 macro. Market usually reverses around that time. After 10:50, it usually reverses. In my experience, what I've seen, it's a good time to reverse, and that's exactly what the market does. It climbs up to the breaker, rejects it, come back down to retest that fair value gap, shoots up, rejects the top of it, again visiting that inverse fair value gap. That's all noise. We don't want to participate in it. Again, playing in between the breaker, taking out the low eventually. Once our sell side is taken here, let's visit 1 hour. We have good insights there. In 1 hour, we had a fair value gap here. Clearly, a nice fair value gap. Market fills it up, shoots a bit out of the lines. This wicks 50%, almost there. Then climbs up to the inverse, comes back down, touching that order block, that bottom candle here. Also, I have that favorite tracement there. So it's basically an OTE. Market climbs up, comes back to discount. We have a fair value gap, it fills it, climbs back up. There's a good setup there, 10:50 to 11. Then in lunch hour, it revisits that sell side liquidity, takes out this and this, relative equal lows, come down, and then again shoots up to take the buy side. Let me measure that. Just piercing that close, not bad. Let's check 4 hours. Alright. Look at the wick. Look at the wick. Almost rejecting that 50%. What's the low? In 19/201. Only 4 handles. Only 4 handles. Okay, here. Nothing much. 15 minutes. Rejecting the top of this order block. Very sweet. But 4 hour level was really good. Climbs up. Revisit this fair value gap and the previous 1 minute order block. Actually a breaker. Let's go back to 1 minute. And our next sweet spot is after 1:30. 1:30, I like to look for afternoon setups. I usually sit around 1:15. At exactly 1:30, it makes the low, climbs up, retest something not clear in 1 minute, but look at 5 minutes. This is 1:30. There's some fair value gap there. It almost touches the 50% of it, rejects it. See there? Breakaway gap, immediate rebalance, fair value gap, touches it, order block. This order block actually touches the high of it. Oh, where's the open and close? 277.75, 277.5. 150, open was 75. Okay, where's the low of it? 277.50, almost touching the close of it. That's precision. Okay, touches it, rejects it, revisits it. This. Imagine we taking trade here to first presented fair value gap or top of that breaker. 115 handles couldn't be better, and we don't need that many. Even 50% of that breaker is more than enough. Okay, climbing up, rejecting that inverse, rejecting that first presented fair value gap, making a high. And where does it make the high? NQ1 continuous chart, it makes the high just above this daily volume imbalance, fills it up to the top, then again does its little reversal thing here. That's our last hour macro. Is that the one? I don't know. I'm not gonna go on about the last hour macro as I'm not experienced about it. I will learn about it. I have just marked it that last hour macro, what it does, it doesn't care about the overall bias. If the buy side is taken and we have some sell side, it then goes for the sell side. Pretty simple. It just goes for the sell side. If one side is taken, it just goes for the other side. That's what the last hour macro does. Quickly jumping into risk management. I have created some notes. Okay, first thing first, do not force the setup. If there's a setup, if it's simple. It's either there's a setup or it's either there's not a setup. Like, it couldn't be like there's a setup but you cannot see it. If you can see it, it's there. If you cannot see it, it's not there. Do not force it. Do not keep jumping into different time frames to find one and enter. Like I made clear in this review, it was very simple. 5 minute, 15 minute, 1 hour, 4 hour levels, obvious levels, wicks 50%, fair value gaps, OTEs, reversals on certain times, macros. Nothing new actually. Every day I keep visiting the same levels and they keep respecting the market. How about 950 to 1010 macro? 950 to 1010 macro. Well, you tell me. We have a good move, but it's not leading us anywhere, so we're not going to take a trade. At 1010, it surely retests the inverse fair value gap, indicating low prices. There's low probability, maybe taking few contracts in micro, but not a full-fledged trade, of course. So for risk management, do not force a setup. It's either there or it's not there. Simple. And growing small accounts, I saw ICT video. So what I need to avoid is, I need to avoid rushing to make massive handles. I should take partials. I should be very emotionless with my trades, not focusing much on my targets, cutting the losses and sticking with the risk management of 2 losses a day. That's it. And I can take 3 wins actually. I will explain it further. Do not open yourself to high risk in hopes of equally big gains. Like what I usually do, I will put on a big stop loss of $600-$700, hoping I would make 1500s. Like, that's not gonna work. Market can go either way, and if it goes against you, you lost a big chunk and you end up making nothing. Never open yourself to high risk, and do not assume taking small risk defined trades will not grow the account. Compound interest works, actually works. I have gotten nowhere with that big ass trades. Of course, small trades will get me somewhere at least. Do not sacrifice equity for poor planning and I should properly check all the angles. Like today, I was poor in planning. My mind was fogged. I literally didn't know what I was doing. I was just forcing a setup because the account was new, everything was fresh. I wanted to make first trade a big win. That what came in between my mentality and my plan. What's gonna be my aim? Learn to respect the risk side of trade setups more than reward. Risk should be controlled. Eventually, you're gonna win, but control your losses. It doesn't hurt to take profits, but it surely does on the losses. Identify setups that permits 3 to 1 ratio payouts or at least 2 ratio 1. I have made a plan where 1 ratio 1 is also good for taking partials. We're not leaving that small chunk, even that small chunk. Compound interest, baby, it's gonna work now. Frame good risk reward setups that has little impact if unprofitable. I should determine the stop loss handles before I click buy or sell. Sometimes I just click buy or sell and then I'll be figuring out where to put the stop. It's 30 handles to put the stop. It's not gonna work like that. Before I should know that the stop is only, like the fair value gap is only 30 handle fair value gap. So when it visits the middle of it, I know the stop loss gonna be 15 to 20 handles, of course, because the whole candle is 30 handles for that fair value gap, and if it visits the middle of it, I can be safe with only 20 handles in micro. So reality of reward to risk trades. If my win rate is 33%, it actually, according to my top step account, it's been dancing around 30 to 33% because of my poor trade management. 2 ratio 1 trades are more than enough for 33% and 3 ratio 1 for 25% if I want to pass it using compound interest. And what should I focus initially? Initially, I should focus 6% a month, risking 20 handles for 40 to 60 handles actually. What I have made a rule for myself is I will be risking only $500 a day would be my risk tolerance. 2 losses and I cut it. Each loss allow 250. Exposure in micro. 5 max contracts could be less if the stop loss needs more space or the trade is low probability. And also on the other side, I'm allowed to take 2 wins, like 1 ratio 2 trade, 500 is good enough profit for 1 trade. If we want to go 3 ratio 1, then 750 at max. Second trade again in micro. Same targets and done. 2 trades a day. If I win 1 and lose 1, I get to trade 2 more times. So total 3 times, but would not exceed 3 times at any cost. that's gonna be my risk management for this remaining week, and the upcoming week will update you more on it. Peace for now.